I think it's still very likely that Bitcoin's going to be above 100,000 before year end, and maybe even above one to a new high. So Bitcoin makes its moves in 10 days in every year. I think some of those best days are still going to happen before year end.
Tom Lee begins by acknowledging something important. Yes, he expected the S&P 500 to hit 7,000 much earlier, even in the first half of the year. But what derailed that timeline was not the underlying economic strength. Instead, it was the sheer violence of the year's unexpected shocks. This year delivered a major bear market. The largest tariff hikes in U.S. history, multiple policy surprises, a waterfall decline in equities that mirrored previous crashes. Yet, despite these shocks, the market did something remarkable. It recovered symmetrically, regaining every point of its decline. For Tom Lee, that resilience is the real story. It signals that investor positioning, liquidity, and earnings strength created a foundation strong enough to withstand repeated blows.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
Now, you've been, I think, pointing toward, let's say, 7,000 in the S&P by year end. Now, that's only like 2.5% up from here. We made some progress. But a year ago, you also thought we'd hit 7,000 in the first half of this year. So what happened along the way? And I guess, what might you think about in terms of impediments looking into 2026?
Yes, I mean, we're almost through this year. And I'd say, looking back, this was 5 years of history compressed into 1 year, because we had a major bear market, the biggest tariff hikes ever. And that, of course, killed any hope of any 7,000 in the first half. But miraculously, stocks went into a waterfall decline and recovered every single point of that decline symmetrically. So it really speaks to the resilience. But I guess as we're thinking about next year, I bet you it's going to be very similar in the sense that we'll get a policy shock, maybe whether it's monetary or from the administration. It could lead to a big drawdown of 20% again. But it's a replay of this year. And maybe we've now had 3 20% bear markets in 5 years. I mean, that's a lot of history compressed into a 5-year period. Now,
you mentioned, obviously, the confusion over the path for the Fed as contributing to this recent pullback, as well as some policy flux in there. What role did the violent shakeout in crypto have on all that? Because a week ago, that's all we were talking about, was Bitcoin can't stop going down. The NASDAQ wants to follow it, or people are concerned about how that's going to knock other things loose in other financial assets. So it's stabilized, but it's not exactly sort of participating to the upside in this bounce.
Yes. So crypto had been a leading indicator for actually most of the last 5 years. But on October 10th, crypto had what I would call Armageddon, a flash event. But it led to a liquidation that was never seen in the 15 years history of Bitcoin. About a third of the market makers went out of business that day. Almost 2 million accounts went to zero. And it was because of a pricing error, what I would call a glitch. It led to what they call auto-deleveraging.
You've definitely made that case that it definitely seems as if there was something in the kind of market maker functioning that got fouled. Now, that being said, the reason you can have all those accounts auto-liquidated is because there were that many accounts with that much leverage that got Bitcoin up to where it was, above 120.
Yes.
Right? I mean, so it's not as if it happened in a vacuum.
Yeah. So in a way, it means crypto represents really a very precise measurement of risk appetite, because there's so much more leverage. And that got wiped out.
Right.
That last time it happened in 2022, it took 8 weeks before people sort of touch their toes back in. I think that's where we are. We're near a bottom. But now I don't think crypto leads. Crypto is lagging because it's really the AI that's going to be leading.
Okay, so basically that is kind of sidelined the idea of what, Bitcoin 150,000 you were thinking before?
Well, I think it's still very likely that Bitcoin's going to be above 100,000 before year end, and maybe even above one to a new high. So Bitcoin makes its moves in 10 days in every year. I think some of those best days are still going to happen before year end.
You got to look at Bitcoin and stocks generally the same, right? If you go back and you look, the fear and greed index is actually very, very useful in moments of extreme panic, which is what we had. I saw the equity fear and greed index, CNN has a great one, got down to 6. I'd never seen it that low before. The Bitcoin one got down to 8. I'd never seen it that low either. These are numbers that are lower than during COVID or during the FTX collapse, etc. And the reason why I say that that is a really good metric is because it's essentially measuring sentiment, and sentiment can't stay at 6 or 8 for weeks on end. So what you get is you just get max fear. It's the whole point of the measurement. And then of course people say, well, maybe it's not as bad as we thought it was going to be. It could still be bad, but it's just not that bad. It's not that extreme. And then you'll start to see kind of money come back in. The second thing is I recently interviewed Matthew Siegel from Van Eck. And one of the things he brought up that I thought was really fascinating, I've been thinking a lot about it over the last couple of days, is Bitcoin's volatility has fallen in half. It's basically been cut in half over the last couple of years. So if Bitcoin's volatility went down by about 50% and Bitcoin's big bear market drawdowns used to be around 80%, well, half of that is 40%. Now, again, these are kind of round numbers and somewhat just used for illustrative purposes. But if Bitcoin's volatility has been cut in half and the drawdowns used to be 80% in the bear markets, then you would expect the drawdown maybe is only 40%. Now, why is 40% an interesting number? From 126, which is the previous all-time high or current all-time high of Bitcoin, down to about 80K, that's just a little bit less than 40%, 36, 37%, depending on the exact numbers you use. Now, why is that important? Well, because you almost got down to the full 40% drawdown. So do I think that we've bottomed, at least in the short term? Yes, I do think that Bitcoin, kind of hit this max drawdown period, draws down, almost 40% in a month and a half. It's a pretty big number. It's pretty fast. Mm-hmm. And then it has kind of had this like little relief. Now the question is, are we going straight back to all-time highs? Like, what is the most entertaining outcome is the most likely? Like, welcome to Bitcoin, Wall Street, right? Imagine all of a sudden these guys, they launch their ETFs, they get the government on board, they're all sitting there, fat, happy cats on Wall Street saying, ha ha ha, we've got new revenue, we've got new customers, we've got all kinds of new assets. And then Bitcoin does Bitcoin things. It runs from 69,000 in November up to 125, back down under 100, back to 125 to 80, and then goes all the way to an all-time high. All of that happens in, let's call it 13 months. That'd be a Bitcoin thing to do. I'm not saying that that's for sure going to happen, but I think that when you start to play in Bitcoin, Bitcoin welcomes you, and the only way it knows how is that volatility bull. It starts bucking around, moving, and people are saying, what is this thing? Do I really want to hold it? Do I really believe in it? Do I really think it should have a part in my portfolio?
Perhaps the most important part of Tom Lee's analysis is his insight into the Federal Reserve. Traditionally, the Fed has been highly consensus-driven. But now, according to Lee, the institution is in full-on intellectual civil war. There are members calling for more rate hikes, members calling for aggressive cuts, members wanting a pause. The Fed is publicly divided. Powell, meanwhile, is silent, strategically silent. Tom Lee compares the internal voting dynamic to Congress. Before a policy decision, you count votes behind the scenes. Only when you're confident you have the majority do you bring it to the public floor.
And when you're an individual, you can ride the bull, you just strap your hand in, you hold on, ride it, see what happens. It's going to go up, it's going to go down, it's going to go sideways. But if you're an institution, you're doing it with somebody else's money. They don't want to see we're up 40%, we're down 60%. Oh, wait, we're back up 30, now we're back down 10. That's not what these people are paying these institutions to do. Usually people are not giving their money to somebody else for total return. There's usually some sort of risk mitigated return. Now, I'll make the argument that putting Bitcoin into a portfolio actually improves the portfolio. It tends to be non-correlated over long periods of time. It tends to increase the Sharpe ratio. It tends to actually make the portfolio much more resilient, much more asymmetric, all these things. If you add even a little portion of your portfolio into Bitcoin, it can actually drive a higher return and do it with less risk, which is what these people want. But the average person, all they see is this statement I get every month keeps showing me a number that's up, it's down, it's up, it's down, it's up, it's down. A lot of people, they don't want to keep talking about it, right? If you're a financial advisor, do you want to spend your time saying to your client, hey, stock market's up, right? We're making money in the stock market. It's up 15% this year. We're killing it for you. Or do you want to keep talking about the 0.5% or 1% allocation to Bitcoin that's going all over the place and the client keeps wanting to talk about it? That's the stuff that you're starting to figure out here. And so do I think we've bottomed? Yes, at least in the short term. Do I think that we're going back to all-time highs? I have no clue. Could we go to 60K? Sure. Could we go back to 125, 130? Sure. It's kind of a jump ball to me. And I think that really Fed rate cut, we need the rate cut. So in December, if they all of a sudden pause rate cuts, which would be absolutely insane and dumb, but if they did do that, I think that could be a headwind for Bitcoin. The second thing is, I think that there's a lot of people who going into the end of the year, they're up big. People go starting in November, maybe even in October, kind of Q4. If you're up big, you go into turtle mode. Turtle mode, you know what that is?
Nope.
You know how a turtle walks on the ground, it's got his head out, arms and legs out, but it's got a big shell? Turtle mode is the second you think you got something, like a big return year, and you know your bonus is tied to it, phew, your arms and legs come in, your head comes in, you use the shell to protect you. It's turtle mode. I ain't doing nothing. Give me my gains, give me my bonus, and I'm out of here. I'll see you in 2026, right? So if you think about that, that turtle mode, a lot of portfolio managers start going into turtle mode. Some people call it hedgehogging, right? All of a sudden you just get real tight. I don't want to take any risk.
Defensive instead of offensive.
Yeah, I don't want to take any risk. I'm up 20, 30% for the year. I'm killing. I look like a genius internally. If I go up from 30 to 35%, nobody is like he's a bigger genius. The only thing that can happen is I can go from 30 to 20 and they go, oh, that genius is really just above average. So that's what's starting to happen here as you're seeing some of this. Now, Bitcoin was up on the year and now it's down on the year, right? It's kind of like flattish to down. So now all of a sudden people are saying, wait a minute, that's a tainted asset. That one didn't go up this year. I don't want to buy the falling knife. I don't want to go step in on something that's down 40%. Now, of course, when's the best time to buy an asset? When it's down 40% in 6 weeks, right? And so that's where I think you see there was tons of volume that came in. You saw capitulation of like the short-term tourist in Bitcoin. You saw tons of volume come in terms of people starting to buy again, both on Binance, Coinbase, a bunch of these exchanges. You also in the stock market saw lots of volume come back to things like ETFs, etc. And so I think that people finally put all of this in the back of their minds. The odds of a December rate cut went from like 95 to 40. Now it's sitting around 70. So it's kind of normalized. Like, hey, we're probably going to get it. If you notice that Jerome Powell, he ain't been talking in the public. This man cut rates on like whatever, October 29th. He zip it. He ain't talking. He's letting people disagree out in public. He's letting them all squabble. It's like a bunch of turkeys running around all yelling at each other. And then the big boss going to come in and say, we cutting or are we not? Now, I think that we will get the cut. Jim Bianco has it right now at 7-5 in favor of a rate cut if the votes were drawn. But, you know, when politicians go and they try to pass a piece of legislation, you know how legislation gets passed? Somebody drafts it up, they circulate it among a close group of friends, they build a little bit of support. If you can go ahead and recruit a spy from the other side of the aisle onto your team, right? Okay, now it's bipartisan, congratulations, you put it forward. And then you go and they do what it's called vote counting. You go and you say, do we got the votes or not? Because you don't want to lose a vote. So what do? You go talk to people. You say, hey, John, see this bill I got right here? This one's a good one. It's going to help people. It's going to help your constituents. You're going to look like a genius. People are going to say, John's a great guy. John's a good politician. John's going to get reelected if he helps pass this bill. And they say, John, do I got your support? You going to vote for this? And you just say yes or no. Sometimes you tell the truth. Sometimes you lie. Right? Sometimes you switch your mind. Sometimes you flip flop. Right? But this is the game. They're counting the votes. And then only when they think they got the votes do they bring it to the floor and they say, let's vote. And so at that point, it's pretty much just a formality. They already know they got the votes. Well, now what's happening is we're moving from a world where the Federal Reserve, it was all consensus driven, right? It is famous that in 2010, Thomas Honig, he dissented 8 different times, kept raising his hand and saying, this is crazy. This is crazy. I disagree. But everyone is consensus driven. Jerome Powell has actually had some of the highest percentage of consensus during his tenure as the Fed Reserve Chairman of any other Fed president in recent memory. But now it is a full-blown revolt internal in the Federal Reserve. And so you have these two groups that are coming together. You got the people who think that we should pause or even hike. I mean, these people are financial terrorists. Like, what are you talking about? Second is you got groups that are saying we should 25 or 50 basis point cut. Again, the turkeys are squabbling. They're letting them all go out there and say what they think. But I think we're going to get the rate cut because the data supports a rate cut. And so if we do get the rate cut, I think, and the market believes we're going to get the rate cut, you see confidence come back into the market. You see people say, okay, you know what? This thing isn't as bad as everyone thought. I do think that we're still in this risk on global bull market. I'm going to put money back in the market. And so if you got people putting money back in the market, you get a stabilization in these prices. That's what's happened with Bitcoin. That's what's happened with stocks. And then we kind of go from there.
Market odds of a December cut crashed from 95% to 40%, back to negative 70%. Powell is letting the governors publicly squabble. But the data supports a cut, and Tom Lee believes we will get one. If the cut arrives, confidence should return quickly. Stabilizing both Bitcoin and equities, Tom Lee's final message is clear. Despite the violent pullbacks, despite the crypto liquidation shock, despite Federal Reserve chaos, he believes we remain in a global risk-on bull market. The moment rate cuts begin and policy stabilizes, capital will flow back into stocks, crypto, and risk assets broadly. The worst of the panic capitulation is likely behind us. And that wraps our expert-level summary of Tom Lee's latest market insights, an extraordinary look into volatility cycles, sentiment extremes, institutional psychology, and the internal turmoil shaping the Federal Reserve.